Hi, welcome to Money Confidence. My name is Crystal Oculee, and I'm the Chief Financial Strategist here at Confidence Wealth. So every week I bring up a topic that was talked about that everyone had questions on, and hopefully it will be something you would benefit from. So the topic of conversation this week has been, should I contribute to my regular 401k or should I contribute to my Roth 401k? So really quickly, let's make sure that we're not confusing this for IRA, Roth IRA contribution, because that has, income limitation and so forth. So we're talking strictly 401k. You're working for your company, the company you work with has a 401k and it also has a Roth 401k, which means the normal contribution you normally would do. So example, if you're under 50, you have a maximum of 19,500. If you're over 50, you can do catch-up contribution of 6,500 in addition to that, which means 26,000. So really that's the question. Has nothing to do with if you are over a certain amount. In the same way you could contribute to your 401, you can contribute to your 401 Roth 401k, that portion of it, right? So which one should you do? I always go back to what are you trying to accomplish? And ultimately, what is your belief about taxes in the future? So if you're like me and you believe taxes are going to go up in the future, then you're going to want to contribute to your 401k Roth because you're looking to create a stream of income, supplemental down the line, tax-free. That's what you're looking for that investment to be for you. So let's talk a little bit about why a lot of us were in the business of doing a regular 401ks, most of us. So if you look at in a traditional way, the idea was while you're working, your taxes are higher, you're at a higher tax bracket, and you should contribute to your regular 401k, therefore, bringing your income to a lower amount to get taxed on. And then later, when you are retired and have less income, then you would be at a lower tax rate. So then it made sense at that point to withdraw from your 401k. So you took advantage of tax planning in a way during your accumulation phase. By the way, accumulation phase means while you're saving before you get to retirement, which is then distribution phase. So if you thought in distribution phase, I'm going to be at a lower tax bracket, it made sense why all along the way you were contributing to your regular 401k. But let's now talk a little bit about what most of us think. So besides the fact, or even the reality of things nowadays, a lot of us are going to make the same amount of income, and in some cases higher than we did during retirement. So if that's the case, then if you're going to be at the same tax bracket, even based on this, the rate of today, then maybe it's all a wash, right? But what if you believe taxes are going to go up in the future, meaning tax rates are going to change? I am one of those believers. I do not believe taxes are going to stay leveled where they are at. Look, it'd be amazing and a miracle if that happens. I just don't see that happening. Look at the debt we're in as a country. Who is going to pay all those bills? Somebody has to, and it's usually all of us in form of paying taxes. So my belief is that my taxes are going to go up in the future regardless. So I rather go the enemy I know today is better than the enemy I don't know tomorrow. So even being at the highest income tax bracket, I rather go ahead and pay my taxes and have my contribution go towards my Roth 401k because I want to build this tax-free bucket down the line. So that's how you have to look at it. I have many clients that are on the same page with me. They believe it doesn't matter that they're at a high tax bracket, even now, they rather pay their taxes, get it done with, and have this money grow for them tax-free. Now, keep in mind, your company's match will not go in the Roth portion as is. So anything your company's matching, that's going to go in your pre-tax dollars in your 401k because they can't put it towards your Roth. But you're going to be able to put your money towards that Roth 401k. So just look at your 401k right now. For example, look at how many years has it been that you've been paying into it? How much has it grown? And think that maybe you wouldn't have put as much in because maybe you were going to pay taxes on it. So if you were, let's just, as an example, you were going to put 20,000 in in the pre-tax side, but because you had to pay taxes on it, you put 15,000, just as an example, because you paid the taxes on it. Well, now that 15,000 is going to grow tax-free versus the 20,000 that was a higher amount, but that was going to grow pre-tax, and eventually you had to pay taxes on it. So that's how you have to really look at it. So look at what you have in a sense in your 401k and say, if I had 25% less or so, maybe more, would I have still been okay because it would have been tax-free? How would that feel to you, even from that standpoint of view, let alone the mathematic standpoint of view of in the future when taxes possibly go up higher? So look at it from that perspective. So I look and say, okay, if you have $250,000 or $500,000 or 1 million or 2 million, whatever the case is, that's all a ticking time bomb to at some point you having to pay taxes on it. So why continue contributing to that bucket if you don't have to? Now, again, please remember, if you are a believer that taxes are going to stay the same or go lower for you in the future, then by all means, then you should contribute to your regular 401k. But the topic is coming up a lot because I have a lot of people that just don't realize. They attend like one of our webinars and then they ask me, well, I thought I was at my the limit that I can't put money into my Roth. Well, they meant the Roth IRA, but they didn't realize that there's an actual 401k Roth that's available to them that they didn't have maybe before. Maybe it wasn't announced to them when it got added. So then they're finding, oh my goodness, this is something I could have done and it has nothing to do with my income. So with that said, meaning like it doesn't matter if they're making over a certain amount, they can still contribute to it. So that's what you want to think about. You want to really look at your situation and say, what am I trying to build? Do I want to continue doing it this way, or have I, built enough pre-tax dollars that at this point I want to build some tax-free dollars? Because I really like that bucket. I call it the green bucket because it's completely tax-free and it's all yours for your retirement. And I look at the actual pre-tax dollars as that red bucket. It's like the ticking time bomb because depends on what the government decides the tax rates are. So the example I always give is, let's just say, make math easy, you have $1 million in your 401k right now and you never paid taxes on it. So let's just pretend you thought during your retirement you were going to be at a 25% tax bracket. So technically that means Uncle Sam is your silent partner and he owns 25% of that million. So you really own 750, he owns 250. Well, what if that silent partner changed its rules on you and now they were 50% partner because your tax bracket went to 50%? And if there are those of you that are looking at me and saying, how could that be possible? Look back at the 70s. Look back at what was the highest tax bracket and then look at everybody else below. So you'd be surprised, in the 70s, the highest tax bracket was 70%. So looking at that scenario, then all of a sudden, the person that had that million has only $500,000 because the rules changed on him. Now, I'm not saying that's going to happen because no one knows what the future holds. But what I'm saying, my belief is that taxes are going to go up in the future. And because of that belief, I personally rather put money towards my 401k. That's Roth, not the regular 401k. So I have a lot of clients that feel the same way. And then I have some clients that maybe are like, okay, putting money in their pre-tax dollars. This is what they're used to. This is what they've been taught. And that's how they feel like they want to continue that. Again, no one knows 100% what the future is going to hold when it comes to our tax bracket. But one thing we all can definitely agree on is the debt we're in as a country. And I want you to just think of, how do you think the government is going to pay for that debt? How? The only way is to increase taxes. We are the only industrialized nation that hasn't had our taxes, the highest tax bracket, hit 50% yet, right now, not before. So what makes you think this won't be next? So that's one of the reasons that I think is so smart to add to that green bucket and keep building that green bucket. So again, if you've been one of those people that have been thinking about which way should I go, if you want to run some numbers and really explore that, So, again, clients, I know we talk about this all the time on your annual reviews or when we're on the phone having a conversation, so we can continue that. But if you haven't looked at it recently, or you're a friend of one of our clients and you're wondering how would that affect you tax wise, just go ahead and say, Crystal, we would like to run some numbers, and we'll have someone contact you, run some numbers for you, and see if this is the best idea for you. And then you can see how it's all going to work out and what is it going to look like. Now, it's never a bad idea to talk to your CPA. Now, keep in mind, here's one issue. If the CPA believes taxes are not going to go higher in the future, and he's only thinking, because a lot of times CPAs are thinking about saving you taxes now. They're not thinking about the future. It's the now moment, and they don't like paying extra taxes. So sometimes it's hard for them to say, put it towards your Roth, because that means you're going to have to pay more taxes this year. And if their job is to save you taxes now, they're not thinking about 10 years from now, 5 years from now, 20 years from now. So keep that in mind too. It's always good to brainstorm with your CPA, but it's always good that you talk about that goal. So that's one of the reasons I always recommend run some numbers, give us a call. Let's take a look at it. If you've been wondering or you already started, just have a conversation. It never hurts. In the meantime, hope now you're no longer confused on the Roth IRA versus 401k that it's an actual Roth 401k. So if you have it, and by the way, if you don't have it available at your company that you're working for, go ahead and bring it up to human resources and talk to them. It doesn't cost them very much to add that 401k Roth. I don't think it's going to be that big of a deal. I've seen some even smaller companies where my client told me that they didn't have it, and I told them, go ahead and talk to them, and they talked to them, and actually they went ahead and added it in. It's not a big deal. So that's why I encourage you, if you don't have one, majority of you will, but if you don't have one, don't be afraid to bring it up. It is going to be pretty easy add-on. And not only it'll help you, it'll help your colleagues. And hey, who knows, even your boss, and they may really appreciate it in the future. In the meantime, if you want to learn more about taxes and you want to understand it further, I have a webinar on our site, or if you want it, just ask for me. Type it up, send it to me, and I'll go ahead and shoot out an email to you, or go ahead and have one of the team members send it to you. So my email is askcrystal@icwm.com. That's again, askcrystal@icwm.com. Until next week, have a great one.